Welcome and thanks for joining us for the Real Estate Market Update for December 2021. My name is Jeff Thomas. I'm a real estate sales representative and we'll focus on the real estate market side. And my good friend and colleague Sebastien Fournier will focus on the mortgage side. So sit back and enjoy. So what we're going to cover today is some market news highlights, some of the local updates from the GTA and TREBB, look at some of the best places to buy now, both locally and across Canada. Then we'll jump into the mortgage updates and what's going on in that front. And of course, we'll provide our prediction on the future of real estate and mortgages before ending with some closing thoughts. So what are some of the market news highlights? Well, as always, there's a ton of reporting about real estate and mortgages in the market, but I found these four capture some of the updates the best. So I'll provide you with a brief summary. At the top, we see the GTA home prices have increased 22% in November. That was a record, and it ranges from 17 at the low end to 45% increase year over year across the region. I know 45 seems insane. On the left-hand side, you can see a record-breaking number of Ontarians have chosen to move out of the province. So again, a large chunk of this was related to just how unaffordable things are in the GTA and across the province, and also the ability to work from home, which freed up people to be able to leave and work elsewhere. So over the last year period, 85,000 people have left the province. The top destination spots have been British Columbia at number one, Quebec and Alberta are close behind at number two, and the Maritimes has been the number three spot for Ontarians moving. On the right-hand side, we notice that the Bank of Canada governor, he's indicated, among others, he's raising the flag that there's overheating in the real estate market and there's a need for correction. He specifically called out investors or speculators who've been flocking to buying properties with the expectations for future price increases, which in his words does become a self-fulfilling, which it is in the short term, and in the long term he indicates there could be a not so happy ending. This is a bit interesting in the least because for the past year, the Bank of Canada has, with their low rates, helped fuel the speculation by commenting, hey, we're going to keep low rates for a while through the pandemic, and we want people to get out there and invest. So they helped create a part of this problem, and I think he recognizes that, but we'll see what they're going to do about it in future slides. And then at the bottom is just an update about a developer just in the area who recently indicated if he does not receive $100,000 more from prospective buyers, he'll be canceling their contract to own it. So you will get a refund on your initial deposit, but you won't get the property you thought you're buying. Now, this seems like it should be illegal, but fortunately it's not. So the Home Construction Regulatory Authority in Ontario, the HCRA, has indicated they've actually received several complaints from different builders across the province about similar things going on. So however, while ethics may be questionable, it is apparently legal, and the agency doesn't have the power to change it. But again, let's see what happens. But again, there's been a lot of growth in the province, and developers are getting in on it as well. So in terms of who is primarily fueling the market craziness, well, in a word, it's investors. And you can't really blame them as well, as mentioned earlier, as everything just lined up properly for that to happen with the Bank of Canada, the low rates, the increase of equity in their property, and just the initial drop because of the pandemic and COVID. So investors are now the single biggest real estate buyers in the province. So if you look at the gold bar on the graph, that represents the multi-property owners. So as you can see over the last 2 years, they've sort of outpaced everyone else. And this year, they've actually become the number one single group buying investments or property in Ontario. So this also extends, we've seen it outside the GTA as well. And in some cases, these people own 3 to 4 or in dozens of homes and properties, which again, there's nothing wrong with that per se, but it does help create the self-fulfilling increasing of prices. So in the 12 months through June, basically the number of people adding mortgages more than doubled the increase that we've seen for first-time buyers. So again, a lot of first-time buyers are being stuck out of the market, while those with assets and wealth are able to accumulate more. So what are some of the potential fixes, assuming you're in the camp that there is need of a fixing? So again, some people say, hey, it's the market, just leave it as it is. Other people, such as the Bank of Canada Governor, StatsCan, CRA, Royal Bank, and CIBC, have indicated that increasing supply is not the issue or the solution, because as they pointed out, investors can easily just buy up everything. So supply isn't the issues, it's more about affordability is a key from their perspective. So at the top, a few of the ideas been promoted recently is the idea of an owner registry to end snow washing. So this is a problem, again, somewhat related to money laundering, where there is no sort of named owner. You can't see who the named owner is property. So the RCMP estimates about $50 billion each year, but it's hard to tell how much of it is money laundering out of the 50 billion the RCMP is estimating, because neither the provincial or federal governments are actually tracking beneficial owners. And the federal government said they won't be doing it until 2025. So it is interesting to note, though, both the PC and NDP during the last campaign did call for a foreign buyer tax. And currently in Ontario, MPP Jessica Bell is introducing a bill requiring the beneficial owner to be disclosed, and she's not waiting for the federal 2025 dates. And again, the RCMP is also putting $20 million to investigate money laundering. So there is a lot of money in real estate, billions is thing, and transparency is an issue. So there are both federal, RCMP, local politicians trying to sort of help resolve that issue. And on the left-hand side, not related to money laundering, but just general speculation, another councillor is looking at adding a speculation tax. So this did exist back in the 1970s, and it actually worked really well. It worked so well that prices went down substantially, and so much so that they reduced the amount of the tax, and then they just removed it altogether after it did its effect of putting prices back. So if this is going to be re-implemented again, we just need to choose the rate very carefully and watch how it's implemented, because it definitely will have the desired effect of making things more affordable, more so than most other measures that have been tried over the last 40, 50 years. On the right-hand side, you can see there has been an increase in mortgage rates. This won't help as much as prices. This is mainly going to, the increase in rates won't impact as much those with wealth and assets already, but what it will do to first-time buyers is make it even more out of reach for them and harder for them to get in and buy their first home. So in combination with other measures, this will be okay, but just raising or making mortgage harder for people is not going to help the people that we want to help the most. So, and at the bottom is, well, what's going to happen next? Well, we'll wait and see. In Ontario, Premier Ford has created a provincial task of 9 people looking at ways to make housing more affordable. So again, this was just created. We should expect some update in 2022. And my prediction is the update will come just in time for the provincial election. So let's look at some of the historical trends that have happened. So looking back about 30 years, it's pretty much like the stock market. There's had its ups and downs, but overall trend for home prices is a steadily increase over time. Some of the biggest pumps were the 90s bubble, after the 2018 mortgage fraud, and the 2017 buyer tax. Those did lead to drops, and the biggest by far was the 2017 foreign buyer tax that took a hit on the prices. So again, we don't know what percent things are going to increase or change. No one can tell for sure, but the idea is over the longer term, if you're investing, prices generally do increase, and there will be, in the longer term, other pullbacks as well. So again, just approach it. Do not try and time the market. Just whatever market you're buying in, make sure you're buying is a reasonable deal based on what's out there at the time, especially if you need to buy and need to move. Next, looking at some of the current trends for listings and sales. If you take a look at the gold bar in these graphs, those are the 2021 bars. So I just added the red line there. So on the left-hand side is the number of new listings. So there was a lot of pent-up demand due to the COVID restrictions. And then when things opened up in March, there was a ton of listings from the pent-up demands. And as you can see, there's been a steady decrease in listings from the March peak. And then in terms of sales, although listings have went down, basically sales have been consistent and even been increasing since the March supply peak, as with pretty much everything being listed is being bought by some person or some corporation. And again, don't see any reason for this to stop at this time. When something's in motion, it goes in motion until something knocks it off. And we'll talk more in a bit about what could possibly stop these trends. So in terms of sales and price, so it's been a crazy year. And November, the 28.3 year over year for the benchmark in all the 416 and 905 of the GTA, and in all the different types, the average was 28.3, which is insane. And the average selling price for a home is up 21.7 to $1.163 million. So again, it's been a crazy year for a number of factors, which we've talked about during COVID, during people being able to move, during equity built up, low rates. Everything sort of come together, leading to one of the crazy years in the market, in the real estate market in our lifetime. And also one thing to note, circled there in red, is in prior months there was a pretty big discrepancy between the 905 and the 416, where the 416 was lower than the 905. That discrepancy has steadily been shrinking the past 2 months as the 416 has heated up. So consider this like a reopening trade in real estate. So as the urban center and the Toronto downtown businesses open up and people come back to work, there's going to be that demand for the condos, for people moving downtown, for homes downtown, living close to work. So again, I consider that sort of like a reopening trade in real estate, and continue to see that trend continue as things move forward. So a question that comes up a lot is, hey, is this a bubble? Is this about what's going on? Like everything is, and I just want to differentiate between overvalued versus a bubble. So yes, I agree that the GTA is overvalued, and in the sense that most people that live here cannot afford to own, and that's how a lot of the overvaluation I take a look at. So can people who live and work there afford to own? So yeah, there are some valuation issues there, because as all levels of government are looking at, they're trying to find to make things more affordable. So, and in terms of overvalued markets, they typically have a slowdown in growth rate, where they just don't keep increasing at 10, 20, 30% and go back to normal rates and plateau. On the other hand, bubbles tend to burst with a sudden downward turn. So my personal viewpoint is that the major urban centers, such as Toronto, Mississauga, South York region, they are overvalued, but they're not necessarily a bubble. Now, again, that could change if these growth rates of 20% continue to happen, but I do not foresee that. But the smaller towns, on the other hand, with no big employers, that are not and haven't been seen as cottage or vacation destinations, and that last year had growth rates of over 35%, where typically prices only increase in low single digits, that is more likely setting up to be a bubble. Because if anything's going to grow, so Toronto's typically had double-digit growth sort of in the area for the last decade or so. Those smaller towns never have. So for them seeing a 35% year over year, if something's going to burst, it's more likely to be in that area. So again, what things could stop the overheating, slow it down, or cause a bubble burst? Well, the first is a big mortgage rate hike. So Seb will talk more about what's going on with mortgage rates. The second is an investor or foreigner tax. So there's currently one just in the GTA and in parts of Vancouver, but there isn't a provincial one or national one. So if any of those come into effect, expect that to have a significant effect as they've already had when they've been introduced. And the last is people choosing or forced to return to the GTA for work will be negative again for the smaller rural areas, but not for the GTA. So those are three things I can see that can change the Ontario dynamic, and as well as Canada. So again, no crystal ball if any of those are going to happen, but if they do, I do expect a subsequent effect. So where are the best places to buy now provincially in the southwest of Ontario? The quick answer is nowhere. Generally, there is not any sort of great deals in Southwest because we've had such huge increases over the last 12 to 18 months. But if you did want or need to live or invest in the GTA now, where would I recommend? Believe it or not, I'd say Toronto and Mississauga is where I've been recommending that for the past few months. And although they have started to increase more, I still see them that they will continue to pick up and outpace the rest of the province, partially for a variety of reasons. So, in addition to Toronto, Mississauga, also the South York region areas of Vaughan, Markham, and Richmond Hill. So, I've highlighted in yellow uh, some of the Mississaugan rates, which you can see are less, substantially less than the surrounding 905 area. So, again, why Toronto, Mississauga, and South York region? Well, to reiterate, they're among the least appreciated in price over the last year. They're also the least likely to decline if there is a major market pullback, price pullback. Secondly, they've always been in high demand and pretty stable, and there's been consistent price increases independent of the recent pandemic double. So South York region, Toronto, Mississauga, they're right on the TTC subway line, they're conveniently on the GO line. So they've always been in high demand. They've always done well, and they didn't just have a pandemic bubble. They've always been appreciating well. Next point is they won't be negatively affected as much by a post-pandemic world when everything reopens, return to normals. And at that point, the smaller rural quiet areas may not be as desirable once life and work and everything's more back to normal in Toronto and the Mississauga, South York region area. The last point, which can't be underlooked, is since the start of the pandemic, there's been sort of a very restriction, a shorter funnel of new immigrants coming in. So when that opens up again, new immigrants generally want to live and work in a big urban center where they have the community. So again, that's more reason why I see Toronto, Mississauga, South York region sort of picking up, whereas the other areas are not as much, more of a slowdown. So moving away from local to national. So again, as I mentioned, basically in Southwestern Ontario, there is not a lot of deals at this point per se, because things are fairly high priced. But nationally, are there any deals? Well, looking at the Bank of Canada indicator, outside of Ontario's major urban centers and Montreal specifically, every other large urban center across Canada still is an okay place to invest. And I would tend to agree with this assessment based on the Bank of Canada findings, based on what I've read and discussed with my peers. So as mentioned earlier, after such a run up though, I don't recommend trying to buy right now for a short-term flip, but invest more for a longer-term horizon, especially when markets have been exuberant as they are, because don't expect this to continue. So now I'll pass it over to Seb for some mortgage updates to see what the Bank of Canada and the banks are doing with this situation.
Well, thanks, Jeff. So you may recall this graph from last month that represent the 5-year Canadian bond yield chart with the 3 events that led to fixed rate increase. One was the first COVID pandemic onset in the early 2020. Then the second one was the vaccine rollout in early 2021, and the beginning of the reopening of the economy in earlier this fall. You've seen those since September. There hasn't been much change at all in terms of that rate. There's been consolidation of that rate. So obviously nobody predicts the futures, but it all will depend on what this Omicron COVID variant is shown, if it's under control or not. That will likely dictate what will happen to the rate. Once under control, however, we do predict rates to keep going up. And as a matter of fact, we've seen already banks starting to increase slightly their fixed rates again. Now, at yesterday's Banks of Canada announcement, which is the last one for the year, as expected, they decided to keep the overnight rate, which, by the way, dictates the variable mortgage interest rates, at the 0.25% mark, which it has been there for past 20 months. The Bank of Canada target is still to increase the overnight rate in the middle quarters of 2022 until their 2% inflation target is sustainably achieved. So while all so-called experts are trying to predict how high the variable rate will increase next year, the predicted range increase tends to go between 0.5% to 1.5%, depending on the experts, and when it will take place. Some say early spring, late spring, early summer. I personally think it's foolish to predict such increase, as we all know that the bank is reacting to the effect of the pandemic on a month-to-month basis. So unless someone is able to predict how many new variants would be coming out, if any, and their impact on destabilizing the economy, i.e., how transmissible they are, how effective the current vaccines are against them. I'd rather not play the prediction game, as I don't find it helpful with advising my clients, as it's like saying that I have a crystal ball on what's going to happen with new variants, and they should listen to me. So instead of doing that, I'd rather take a different approach when a buyer client is asking if they should go fixed rate or variable rate for their mortgage. And I usually go through an in-depth questionnaire with my clients to understand the current situation, any plans they have for the near term, 5-year and 10-year term, to determine the best approach for them. For more details, I refer you to our fixed rate versus variable rate presentation, where we explain in details those differences. Now, as Jeff mentioned earlier in this presentation, whether we are in a potential bubble or an overvalued environment, I always tell my homeowners clients who bought a property at least 1 year ago or more that they're in a very unique situation where they can make their build-up home equity work for them if they wish to. So the table here provides the data from a month ago showing the average price of a detached, semi-detached townhouse and condos in Toronto. And in average, you can see that whatever type of home you own, its value has increased dramatically over the past year. 80,000 on the smaller side if you owned an average condo, to over 300,000 if you owned an average detached home or townhouse. So instead of having that equity sitting idling and never being useful until you sell your property, of course, one could make use of it as a down payment for an investment property. So most people are not aware, except investors that have multiple properties, but most homeowners that only have their own property are not really aware of that. But thanks to the appreciation that happened this past year, and with no fault of your own, you could find yourself able to purchase up to 1.6 million investment property when you use last year's home equity buildup as your 20% down payment. So I'd like to leave this with you as food for thought, as this idling equity could really help you leverage the purchase of a second property and give you the ability to have two properties appreciating year over year instead of one. So as Jeff mentioned, it's not for a quick flip, it's for long-term appreciation, but using your currently built equity to help a second home appreciate. So as a summary and predictions, first, there's no change since last month with the Bank of Canada, still predicting rate increase mid-2022. Also deciding on variable versus fixed rate based on trying to time the Bank of Canada rate increases, I feel is unwise and should be determined solely using what is best fit for your unique situation. And lastly, with the unprecedented increase of real estate prices this past year, all homeowners have built a substantial equity that they could make work for them by using it as a down payment or on an investment property. So by doing so and locking in still relatively low fixed interest rate for the next 10 years if wished, one could sit back and realize the appreciation of two properties instead of one by leveraging their current equity buildup. Back to you, Jeff.
Thank you, Sebastien. In terms of home sales and prices, predictions, summary is 2021 will be the best year on record for GTA sales and prices. Predictions is that we're going to see a continued seller's market going into 2022. As mentioned, people are still sitting on equity and buying power, and the rates don't seem like they're going to be increasing anytime soon. And the third point there is, as things continue to reopen in terms of GTA office and immigrations reopens, I do see Toronto, Mississauga area and the condo market leading the way and overtaking the smaller towns, which over the last year have had the bigger increase. I now see that reverting back to Toronto and Mississauga area and South York region. So again, thank you very much for attending and joining us here today. We are trying to build this up and do appreciate any comments or feedbacks. And if there's anything you'd like us to cover, please do post a comment and let us know. And if you have any questions or need any assistance, feel free to post a question or contact us directly. And again, if you found any of this interesting or helpful, please do press the like button and please do subscribe. We're looking to try and have more stuff out based on questions and demand. So,
thank you.
Thank you, guys.